Welcome to the deep dive. Today, we're zeroing in on one powerful trading idea. Market is smarter, superior, and stronger than you.
Mm.
We've got this piece of guidance, and our mission is really to unpack it,
Mhm.
see what it means for anyone involved or thinking about getting involved in trading or investing.
Absolutely. It sounds simple, but there's a lot packed into that one sentence about markets and, well, our place within them.
Okay, so let's dive into that first bit. Market is smarter, superior, and stronger than you. What does that actually mean for me, the individual trader?
Well, I think it fundamentally comes down to recognizing the sheer scale. The market is this huge collective intelligence, right? Millions of participants,
So
algorithms.
much information being processed constantly.
Exactly. And trying to consistently outsmart that entire system. It's, let's say, a very tall order. Accepting this isn't about giving up.
Right.
No, it's more about shifting focus.
Uh-huh.
Focus on what you can control your strategy, your entries, your exits, and especially your risk.
Right. Okay. So it's less about predicting every twist and turn and more about managing your own actions within that larger flow.
Precisely. Which leads nicely into the next part of the advice. Always see the larger picture, higher time frame, HTF.
Yeah. Why is zooming out so important? It's any to get caught up in the minute by minute action,
Oh, absolutely. Those little ticks up and down can be hypnotic. They feel like opportunities, like you have to react now.
but they're often just noise.
Often, yes, just noise within a much bigger, more meaningful trend. If you're only trading based on those tiny fluctuations, you might find yourself, well, fighting the main current. A lot of losses happen there.
Like trying to catch every little wave instead of noticing the tide is going out.
That's a great way to put it. Understanding the higher time frame, the bigger trend, gives you that crucial context. It helps align your trades with the path of least resistance, you could say.
Okay, makes sense. Now, what about this? Profit is not the profit until book it. This sounds like it touches on the psychology of it all.
It definitely does. It's so easy to see that number go up on your screen, the unrealized profit, and feel like you've already won.
Yeah, you start mentally spending it.
Yeah,
Uh,
exactly. But the market can, and often does, change direction very quickly. Until you actually close that position, sell the asset, that profit is just potential. It's vulnerable.
it can vanish.
It absolutely can. Booking the profit, actually taking it off the table, makes it real. It secures the gain. It's about discipline over greed or the fear of missing out on even more potential gains.
Right. Lock it in. Avoid that emotional roller coaster.
Yes. Which brings us to the risk management part. In any trade, the loss should not be greater than 7% of the invested capital in that trade. That number, 7%, seems specific.
It does. Why that kind of hard stop?
Well, the specific percentage might vary slightly depending on strategy or risk tolerance, but the principle is vital. It's all about capital preservation.
Protecting your base.
Exactly. If you limit the potential loss on any single trade to a small, manageable percentage of the capital used in that trade, you ensure that one bad call doesn't wipe you out or significantly damage your account.
So it's not about never losing because losses are inevitable.
Absolutely inevitable. It's about making sure those losses are controlled, they're survivable. They don't take you out of the game. This lets you keep trading, keep learning.
Okay, so putting it all together, this piece of advice really paints a picture of humility facing the market,
Mm-hmm. Respect for its power.
seeing the big picture, the HTS,
Yeah, getting that perspective.
the discipline to actually take profits,
Making gains tangible.
and crucially, that strict risk management, like the 7% rule per trade.
It really advocates for a more sustainable, less emotionally driven approach to the markets, thinking long-term survival, not just quick scores.
So here's a final thought to take away. This idea of understanding larger forces, respecting them, and managing your own risk within them.
Mm.
How might that apply outside of finance?
Oh, interesting.
In your career, maybe personal projects, even relationships. What are the higher time frames or the bigger pictures you might need to consider there? Some to chew on.